The buy now, pay later market is gaining traction globally. In India, where many people don't have a credit card, the option to borrow money for purchases via apps is giving many citizens access to credit for the first time. Rebecca Bundan tells us how companies and investors are tapping this fast-growing market.
Akshay Savan now makes many of his daily purchases using buy now, pay later options available to him at his fingertips. From paying for cabs, to buying groceries at his local store, to clearing his bills and ordering takeaways.
It has become easier for me to manage these things, and especially because then I know that this is the amount that I'm spending and this is the amount that I need to ensure that I pay it off. So overall, it's become easier to manage my finances across the board.
He has instant access to hundreds of US dollars of credit in total via digital payments apps, all interest-free if paid off in time. Otherwise, he would incur steep late payment fees, which is how buy now, pay later platforms make money, along with commission from merchants on transactions. Increasing smartphone ownership and a move towards online shopping and digital transactions, only accelerated by the pandemic, are among the factors that are driving the buy now, pay later market in India.
There's also the fact that only about 5% of people in the country have a credit card, partly due to a lack of credit history among consumers and because banks have become more cautious about lending in recent years following a rise in bad debt.
This means that many citizens are able to get credit for the first time through buy now, pay later or BNPL options. These give customers access to short-term, interest-free credit online of up to a few thousand US dollars. Customers need to have a bank account to sign up, and platforms use income information and any data available to them on purchase behaviour to decide how much to lend. Buy now, pay later platforms start by lending small amounts to many users, and they increase this as they learn more about the customer and their ability to repay the money. The market in India is projected to surge more than tenfold to reach up to 50 billion US dollars with a projected 100 million customers by 2026 as investors pile in, according to research firm Redseer Consulting.
Why we believe that at least in 2021 we are at a tipping point for buy now, pay later is that there was a 9x growth in the total funding that was received by the BNPL companies. So that's one metric, right, just to see how popular the demand was. And secondly, when we analyze it in terms of the total dispersals that happen amongst customers, the amount of spending people do using buy now, pay later, that amount has gone up to almost about $5 billion.
Companies including Amazon India, ride-hailing firm Ola and digital payments platforms such as Paytm offer their own buy now, pay later options to customers.
So many categories.
Yes. Yeah. And there are startups like Zest Money, which counts Goldman Sachs and Xiaomi among its investors. It has doubled its customer base in the past year to 15 million, and it's partnered with more than 10,000 online and 75,000 physical stores in India. Using Zest Money, customers can shop for goods ranging from clothes to electronics and get credit up to 200,000 rupees, or about 2,600 US dollars, which can be borrowed interest-free to be repaid over up to a 4-month period in instalments. In spite of the potential of the sector, analysts highlight two major hurdles in reaching it: getting more stores to sign up so the payment option can be used more widely, and problems arising from the very real risk of customers accumulating debts they can't repay. Regulation has yet to catch up with the fast-growing sector. Currently, India's central bank doesn't classify buy now, pay later borrowings as loans because they are offered at 0% interest. This means they don't fall under the same regulatory coverage as a bank loan. Without tighter regulation, the risk customers could build up debts they can't repay is a concern, especially as they sign up to multiple platforms. For the companies, lending also comes with risks. Zest Money, for instance, works hard to limit defaults on its loans, including the use of artificial intelligence-driven systems to analyse data, and following Know Your Customer or KYC guidelines, widely used in financial services to verify identities.
So I would say that operating a buy now, pay later business in a market like India is a lot more challenging from a credit risk, fraud and KYC perspective as compared to the Western markets. We're still relatively early in the credit journey in India. The credit bureaus are less than a decade old, and so we do have to have very, very sophisticated risk engines and understanding of customer behaviour.
As buy now, pay later surges in popularity, the opportunity for companies in this sector to tap India's large, young, tech-savvy population has yet to reach its limits. The lag in legislation is an issue, but analysts say they do expect authorities to address it as the sector continues to grow. Rebecca Bunden, CNA, Mumbai.